studying your last two. I swim with tea when they turned in. The staring out to mute and can lend a pole that sunk he died.
As you begin preparing charitable donation claims, it's helpful to know the most common mistakes that new tax preparers make. Fortunately, most of these errors are easy to avoid once you understand what to look for. The first and perhaps most common mistake is claiming a donation without an official donation receipt. An official receipt issued by a registered charity is one of the most important supporting documents for a charitable donation claim. Without it, the corporation may not be able to support the deduction if the Canada Revenue Agency requests documentation. The second mistake is claiming a donation made to an organization that is not a registered charity. Many organizations perform valuable community work, but not all of them qualify as registered charities under the Income Tax Act. Before claiming any donation, always verify that the recipient is an eligible registered charity. Another common error is claiming more than the allowable annual deduction limit. Remember that charitable donations are generally subject to the 75% of net income for tax purposes limitation. If the donation exceeds that limit, the excess should normally be carried forward rather than claimed immediately. Speaking of carry forwards, another frequent mistake is forgetting about them altogether. Some preparers overlook unused charitable donations from previous years or fail to carry forward the unused balance from the current year. This can cause the corporation to miss valuable deductions in future tax returns. Another area that often creates confusion is political contributions. Political contributions are not the same as charitable donations and are generally not deductible for corporate income tax purposes. They should not be claimed on Schedule 2 as charitable donations. Finally, many donation-related problems are caused by poor documentation, missing receipts, incomplete records, or insufficient supporting documents can delay the tax preparation process and may result in deductions being denied during a CRA review. The good news is that every one of these mistakes can usually be prevented by following a consistent review process. Before claiming a donation, verify that there is an official receipt. Confirm that the recipient is a registered charity. Calculate the allowable deduction limit. Review any available carry-forward amounts. Distinguish charitable donations from political contributions, and keep complete supporting documentation with the tax file. The golden rule is simple. Most charitable donation errors occur because either the required documentation is missing or the wrong tax rule has been applied. By taking a few extra minutes to review each donation carefully before filing the T2 return, you'll avoid the most common beginner mistakes and prepare more accurate corporate tax returns with confidence. Before you file a T2 return, it's a good idea to follow the same review checklist every time you prepare a charitable donation claim. A few minutes spent reviewing the information can prevent errors, reduce CRA questions, and ensure the corporation receives every deduction it is entitled to claim. The first step is to confirm that an official donation receipt is available. This receipt is the primary supporting document for the charitable donation. Without it, the claim may not be accepted if the Canada Revenue Agency asks for supporting evidence. Next, verify that the donation was made to a registered charity. Not every organization qualifies under the Income Tax Act, so it's important to make sure the recipient is eligible before preparing Schedule 2. After confirming the recipient, review the donation amount. Compare the official receipt with the accounting records and the corporation's payment to ensure everything agrees. The next step is to calculate the 75% annual deduction limit based on the corporation's net income for tax purposes. This tells you the maximum charitable donation that can generally be claimed during the current taxation year. If the corporation has made large donations, Don't forget to review any carry-forward amounts from previous years. Likewise, if part of the current year's donation cannot be claimed because of the annual limit, make sure the unused balance is properly recorded for future years. Once these items have been reviewed, complete Schedule 2 using the correct donation information and verify that all supporting documents are included in the corporation's tax file. Keeping organized records is just as important as calculating the deduction correctly. Good documentation makes future reviews much easier and helps support the corporation's claim if the Canada Revenue Agency requests additional information. One of the most common mistakes made by beginners is rushing through Schedule 2 without reviewing the supporting documents. This can lead to incorrect claims, missing carry-forward amounts, or incomplete records that may create unnecessary problems later. A simple checklist can help you avoid these issues. Confirm the official receipt. Verify the registered charity. Check the donation amount. Review the annual deduction limit. Consider any carry-forward balances. Complete Schedule 2 carefully, and organize all supporting documents before filing the return. By following this same process every time, you'll prepare more accurate tax returns and reduce the risk of costly mistakes. The key takeaway is simple: good documentation, careful review, and a consistent checklist are the foundation of accurate charitable donation claims. Following these steps will help ensure that Schedule 2 is completed correctly and that the corporation receives the charitable donation deductions it is entitled to claim. Throughout this chapter, we've explored how charitable donations are claimed on a corporation's T2 income tax return. Now let's bring everything together into one complete picture. The process always begins when a corporation makes a donation to a registered charity. Once the donation has been made, the charity issues an official donation receipt. This receipt is one of the most important documents in the entire process because it supports the corporation's claim for a charitable donation deduction. Next, the corporation completes Schedule 2. This schedule is specifically designed to calculate and report charitable donations. It is separate from the corporation's regular operating expenses and follows its own set of tax rules under the Income Tax Act. After entering the donation information, the corporation applies the annual deduction limit. In most cases, the charitable donation claim for the year is generally limited to 75% of net income for tax purposes. If the total eligible donations are within that limit, the corporation can generally claim the full amount. If the donations exceed the limit, the unused portion is not lost. Instead, it becomes a carry-forward that can generally be claimed in future tax years, allowing the corporation to receive the tax benefit over time. Once the allowable deduction has been determined, the amount flows into the T2 return and helps reduce the corporation's taxable income. As you prepare future corporate tax returns, remember the key rules we've covered in this section. Always verify that the donation was made to a registered charity. Always obtain and keep the official donation receipt. Always complete Schedule 2 rather than treating the donation as an ordinary business expense. Always apply the annual deduction limit before calculating the allowable claim. Keep track of any unused donation carry-forwards for future years. Remember that political contributions are not charitable donations and generally do not qualify for the same corporate tax treatment. And finally, maintain complete supporting documentation with the corporation's tax records. Developing these habits will make your tax preparation process more accurate, more organized, and much easier to review in the future. The most important takeaway from this entire chapter is simple. Claim charitable donations only when they are supported by an official receipt from a registered charity. Apply the annual deduction limit. Track any carry-forward balance. Maintain complete documentation. And always distinguish charitable donations from political contributions before filing the T2 return. If you consistently follow these principles, you'll avoid the most common beginner mistakes and build a strong foundation for preparing accurate corporate tax returns. With Schedule 2 complete, you're now ready to move on to the next topic in the T2 return and continue building your understanding of corporate taxation step by step.